and everyone's scratching their head. If the economy takes the expected dip, and some saying as much as 30%, perhaps initially it may be short term. What does that mean for the property market? Does it follow that house prices will go down 30%? And many people, many first-time buyers will say that would be a rather good thing if that did happen.
Okay, well, let's split the market into two. There's those that are interested in capital values, house prices. There are those who are more interested in rents. On the first, for the first group, house prices. I expect that when we get let out of lockdown, asking prices, the numbers you see quoted on websites and in estate agents' windows, will be exactly what they were at the end of February and the beginning of March when we went into lockdown. Estate agents will tell us that it's business as usual and nothing has changed. However, for the few people who are able and prepared to transact in the first couple of months, that's probably June and July, I think they will feel that they're taking a risk, perhaps a risk that by Christmas house prices are much lower, and therefore they'll want something in return for that risk they're taking. They'll like a 20% reduction in the price, but they'll settle for a 5 to 10% reduction in what they're prepared to pay. And remember, ticker prices, house prices, as quoted and discussed regularly by the likes of you and I on Radio Kent, are based on deals done, not on what people would like deals to be done at. So house prices by the summer down, I think, probably 5 to 10%, so not a market crash, but there is a huge question mark about where they might go from there. What happens to house prices is dictated by how easy it is for people to borrow money and how cheaply they can borrow that money. Now, lenders are going to be under extraordinary pressure from the government and from the Bank of England to continue to pass on the kind of discounted rates that we've seen, 360 plus year lows. So I think we can expect mortgages to remain cheap. But what might well change, bearing in mind that we are, I think, anticipating, I'm not saying it's going to happen, but the smart money, the big brains are telling us that we might be looking at conceivably 2 million people unemployed. We're probably looking at a significant, i.e. hundreds of thousands of people earning 80% of what they were earning in January. They're going to have less money, disposable money to spend on things like mortgages. And I think that banks, therefore, are going to make it much harder to borrow significant amounts of money, the loan to value, as we call it. So you'll need a bigger deposit. That will have a downward pressure on house prices. And that is what most people in the industry are concerned about, but does remain a big unknown. So that's prices. Rents briefly, briefly. Rents are going to be much more volatile because the vast majority of people who rent properties are much more exposed to the changes in the economy. If you're not earning as much as you were in February and January, then you're almost certainly going to be able to afford less rent. That's going to have a knock-on effect on investors who are likewise going to receive less rent. Their investments are therefore going to be worth less. And if you're keeping up with this, you're doing incredibly well. That means that capital values again may come under pressure.
But if you've got a house at the moment that you thought up until recently was worth 250,000 quid, and within a month or two that could be worth £225,000, 10% off, what are people going to do? Some people might just take that property off the market. They might say, sorry, I don't want to sell it at that.
Good news, breaking news. Radio Kent once again with an exclusive, Ian. One house today will still be worth one house tomorrow. So whilst, of course, I'm being flippant, what's it actually going to be worth in pounds, shillings and pence, or in loo roll, if that's the prevailing currency by the time we all come out of this, who knows?
Could be.
Let's remember that for those who are moving house, i.e. selling one and buying another, it's all relative. So if you're taking 10% less for the house than you thought you might have got in January, you're almost certainly going to be paying 10% less for the one you're going to buy. First-time buyers, they're the ones who are making the big commitments, so I suspect that they will hold off. And what we've seen in the past, although we have to remember the past is not necessarily a fantastic guide to the future, as it says on all investment products, what we've seen in the past is that buyers as a whole take about 6 months to get over a seismic shock like a referendum, like a general election. So it's actually probably not going to be until the new year, the start of 2021, that the housing market actually gets its mojo back, and we all start to realise exactly how much our houses are or are not worth.